We had the rand trading all the way to 850 this morning, but it looks like it was a mistaken trade in the Tokyo market.
Well, it appears that the Tokyo Futures Exchange posted a wrong price, a wrong closing price on the exchange, which forced a whole lot of stop loss orders going through the market in a very thin, very illiquid market. The Far East is notoriously thin, particularly for emerging market currencies, and exacerbated by platform algorithms that just execute orders as the price feeds come into the system. So that's the story as far as the rand tracking to 850. That, in fact, that was one hit. There was a lot of quite a bit going through at around 825, but certainly caused by system problems.
Of course, we've had the currency strengthening back to about 788 against the dollar, but it does look like risk aversion is building in this market again. We saw those big market falls on Friday in the US, continuing through to Asia this morning.
Stephen, yeah, the Wall Street fall was a bit of a surprise, particularly in light of the fact that the US economic data that came out on Friday wasn't bad at all. And it just does show that current levels, how sustainable are they? And for me this morning, the gold price that has rallied shows that there's a lot of uncertainty in the market as to the fortunes of all the currencies globally. And it does point to a heightened risk aversion. And hence we've seen the rand come under pressure despite the platform problems in the Far East this morning.
Mm-hmm. I mean, do you think some of that risk aversion might have been caused by the bankruptcy filing from CIT Group? And of course, we heard murmurings about the strength of the balance sheet of Citigroup as well. So it looks like the financial sector is coming back into the forefront again.
Well, the CIT story's been around for a while, and I wonder, in fact, if a lot of people didn't confuse it with Citigroup, and that caused some of the panic. But nonetheless, there are stories now that Citigroup is set to release a sort of $10 billion loss on their latest reports, and that will create enough concern on its own. I think the financial sector is certainly very has run up very strongly in the last 6 months, and there are a lot of question marks around the sustainability of those earnings, particularly given the commercial real estate sector in the US and the problems that that's facing.
Well, David, you mentioned some of the econ data coming out on Friday, and of course on Thursday we saw those US GDP figures, 3.5% growth for the third quarter. But of course a lot of that was due to the cash for clunkers stimulus and also the rebuilding of inventories. And if you strip those out, growth doesn't look that strong at all in the States at the moment.
Well, absolutely, Stephen. I've been saying for a long time now, for a number of months, as long as the sort of resumption in growth doesn't create the jobs that are required, it's not going to be sustainable. And that's what we're seeing at the moment. Punters and investors around the world asking how sustainable this rally is, given the fact that real economies globally, although we have seen some good purchasing managers, PMI numbers coming out recently, the real economies are still struggling, and jobs are battling to be created.
Of course, those PMI numbers globally are showing growth in their manufacturing sectors. We had our own PMI coming out this morning, and we're still not quite at that 50 level yet, so still contraction in our manufacturing sector, David.
Well, we do lag the rest of the world in terms of how we track the global sort of economy, and I think that our PMI numbers this morning showed just how desperate the situation is here in South Africa. And if we link that to the finance minister's budget speech last week about the budget deficit, it is going to be a problem going forward. And I think South Africa as an investment destination is raising a lot of question marks at the moment, and I think that will keep the rand under pressure, particularly on a trade-weighted basis.
Well, just looking back at the medium-term budget last Tuesday, and one of the surprise elements was the relaxation of exchange controls. Do you think that's contributed to the weakness we've seen in the rand over the past week?
I'm not sure how much, Stephen. Certainly it would have been a factor, but the rand was weakening as it was. I suspect that, given exporters the opportunity to hold their proceeds offshore for as long as they like, will certainly play a role going forward. And what we will see is in times of crisis and in times of stress, you won't see that natural supply coming in from exporters whose 180-day rule kicks in. So in times of stress, it's certainly going to play a role.
Of course, we've also seen the dollar rebounding back from that 150 mark against the euro and back to around 147. So dollar strength also really driving the rand weaker at this stage.
Well, you know, when markets become uncertain, bonds become a bit of a safe haven, and the US bond market is the biggest market in the world, and we've seen yields fluctuating quite dramatically there. But certainly the dollar strengthened on the fact that people have traded out of equities and into the bond market. But in general, the whole currency market globally is really in a state of flux, a huge uncertainty in the market, and I think that's part of the reason that we've seen the gold price run up today.
David, what did you make of the trade figures that came out on Friday afternoon? We had a 4 billion rand surplus for last month, and that was against expectations of a deficit of about 1 billion rand. So surpluses for 4 of the last 5 months, and that should bode well for the current account going forward.
Well, absolutely, and it's easy to question the assumption, though, whether the rand is too strong at these levels, given the fact that we have posted trade surpluses over the last while. But those numbers are notoriously fickle. If we do see growth kicking through in the rest of the world, we'll quickly move into a deficit. As you know, so we are an importing economy. We do import manufacturers' goods largely, and export raw materials. So I don't watch those numbers too closely, just given the fact that they are very fickle.
David, what's your view for the rand in the short term?
I think rand will remain under pressure, but again, you know, we mustn't be too fixated as to the rand against the dollar. It's really what it's doing against global currencies around the world, and the rand has weakened quite dramatically over the last few sessions. You know, euro rand was not so long ago trading at 10.80, this morning at 10.65. The rand has moved from about 7.30 all the way up to at the current levels roughly 7.90, and I expect that pressure to remain unless we see some positive economic data coming through across the globe, and that will add to risk appetite. That will obviously be beneficial to the rand, but that remains to be seen, Stephen.